Hi, my name's Leon Rowe, currency trader and trading coach at trading180.com, and welcome to this week's supply and demand Forex technical analysis. If you're new, welcome, and if you're returning, welcome back. And I hope you do find these weekly videos useful and implementing in your trading. Now, if you're wondering why you should be trading supply and demand in the first place, it's really because you're identifying areas of value on a price chart, and this is proven by the way that markets react at certain areas. And if you want to know more, I have a free introduction into supply and demand trading for about 30-minute video. The link is in the description box below, or I'll put it up top, and you'll understand why and how to really identify areas of value on a price chart. Also, if you go to the YouTube channel, you'll find some more content on here. And if you want to know how I draw my supply and demand zones, right, there's a course right there. And also we've got a lot more content, but we've also got the free Forex supply and demand order flow equation, and you'll see why I'm pointing that out in a sec as we go through the charts, right? So just basically gives you a perspective of why there should be more demand or supply at a certain area from a technical analysis point of view. We always add fundamentals into our trading first. I should say add it, but we do our fundamental analysis first. And again, another free course, link is in the description box below, and it will take you to this page, right, where you've got fundamental analysis videos. So just click on there, and I go through my fundamental analysis and how I derive value from concepts like interest rate hikes and holds, interest rate cycle, business cycle, etc. Right? So anyways, let's get on to the technical analysis, and we start off on the US dollar index. Now, US dollar index is just a measure of the dollar's strength, right, against the basket of the major currencies like the yen, the euro, and the pound. So what you want to do is just keep an eye on the dollar index when taking any dollar trades, and if it comes down into a demand zone and gives some reacts from around here, which it did this week, what you want to do then is start buying the dollar on other obviously dollar Forex crosses. So this week prices came down. We had minutes, FOMC minutes this week as well, Wednesday, and the Fed were quite hawkish. So you can see, obviously, hawkish Fed, expectation of interest rate hikes still, reacted. And this obviously was a cheap area in the past, right? And prices came back down into this area, and bargain hunters ended up buying up. So again, what we do is add a supply zone on here, simply because this was an area where the dollar was sold off. Now again, you have to do your fundamental analysis and really ask why you are buying or selling the dollar. It goes really beyond, your buying and selling decisions should go beyond the price chart. If you're simply just using levels and price action to determine your buying and selling decisions, I personally think that you're at a disadvantage. I tried it, I couldn't make it work, and maybe you're here because you can't necessarily make it work either. Right, so I'd advise you definitely watch the fundamental analysis course and add an extra edge to your trading. But if you do want to take advantage of the some potential dollar weakness, right, this would be the supply zone, and you'd be looking for short trades on the dollar pairs. So if you do prices do actually come back down to this demand zone, this would be the area that you'd be looking for confluence. In fact, you'd be making higher highs here. So this is your new demand zone right here. So you need prices to really just come down on a bit of a pullback, and then wait for obviously a pullback on any other dollar pairs. And we just use this as confluence. It's not necessarily for you know, exact. You don't have to necessarily wait for price to come down into a demand zone. Prices may continue, you know, going higher. In that case, you just take you know, trades if they are at demand zones or supply zones on the Forex dollar pairs. So moving on to the dollar yen. This week we made higher highs, higher lows, creating new demand zones right there, and we had some hidden demand right here as well. So again, in line with dollar expectations for a rate hike, and what you'd be looking for this week if you're looking to buy the dollar is waiting for a pullback before looking to get long against the yen. Right now we are in an area of supply, which is potentially a cheap bargain area for the yen. So if you do feel that the yen will strengthen from this area and this price area here, then this is the area to try and look to get short. Now again, some of you may have noticed, or, you know, it's hard not to notice this big blue box that came up, and this is the supply and demand technical analysis basics. And what this refers to, again, going back to YouTube channel, is really the supply and demand order flow equation video, and how to apply the horizontal support and resistance, diagonal support and resistance, and dynamic support and resistance to areas of supply and demand, right? And once you've done that, then you should have really built a picture as to why there should be more supply at an area or demand at an area from a technical analysis perspective, right? So this is just a reminder to those to definitely, you know, watch the video and apply these principles within these demand or supply zones for really extra confluence. So if you're looking to be a buyer of the dollar, right, you're looking for, again, a pullback into this area before looking to get long. Remember that the yen is a beneficiary of risk off sentiment, meaning that when there's you know, uncertainty in the markets, right, stock market, you know, selling off, potential, you know, people use the word crash. I don't like to use the word crash, but you know, basically stock market sell off, or any kind of political or economic turmoil within a country, then you know, the yen will benefit. All is well in the US at the moment as far as economically, you know, so you're seeing the effects of that, and really a strong dollar, you know, obviously with interest rates being hiked as well. That's not to say that prices can't come down, you know, it could be profit taking around here, etc., and things can change over the weekend when it comes to, you know, economic and sentiment news. But these are your options for this week. And again, just be careful when you know, shorting the dollar. You really want to see you know, the stock market, you know, selling off as confirmation with you know, some sort of risk off sentiment. Dollar Swiss came down this week into this area of demand, right? And what you would do is, even though we use the daily areas of demand and supply, what you want to do is look for an entry on a lower time frame, right? So again, last week, if this pin bar here was your entry, right, brilliant, you know, you got in within this demand zone, and then prices have obviously made their way higher. And again, just add the supply and demand order equation to areas of supply and demand. So if you're looking to be, again, a buyer of the dollar, I think you'd be waiting for another pullback. By the way, I would say the more times a level gets touched, right, the weaker it becomes. So if you are looking to be a buyer of this demand zone, right, in this demand zone, buyer of the dollar, it has been touched once, twice, 3 times, 4 times tends to not necessarily work so well. But again, it depends on the fundamentals. So what I would say is just be careful, lower your risk size if you want to do that, or maybe stay out of the trade. If this level doesn't hold, then this would be the level to get long. If you're looking to short the dollar, you've had an area of supply where it's been touched once, you know, twice, the third time at the moment. So potentially you could look to get short again, but same as this demand zone has been touched a few times. So we expect one of these levels to break at some point. Markets never stay within, you know, a range. Support and resistance traders believe that the stronger or the more times the level is touched, the stronger it becomes, which is actually nonsense, because otherwise the market would never move anywhere, right? It would stay within the range, and you know, that would be that. But so the weaker it becomes, or the more times it's touched, the weaker it becomes. So if you want to be a shorter, this is pretty much the first area, and again your second area to look to potentially take advantage of some Swiss strength or some dollar weakness. Moving on to the dollar CAD, and the dollar CAD this week we've had again some dollar strength. The CAD has been bit weak, and it's more to do with I would say the oil prices, as oil is Canadian dollar is highly correlated to oil. If you look at the oil markets, you'll see that oil has really come down quite drastically. They're talking about, you know, it being in a bear market. So even though we have had recent interest rate hike on the Canadian dollar, the price of oil hasn't helped the Canadian dollar strengthen at all. So you're seeing potential dollar weakness, even though I do think the Canadian dollar is undervalued, you know, compared to a few other currencies, but the dollar is not one of them. So we did have this from last week. So again, we kind of had a bit of a shallow pullback into this area of demand, and then obviously prices went higher. If you're looking to be a seller right now, this would be the area that you'd be looking to get short. If you're looking to buy the Canadian dollar, right? And it would probably be, you're looking at probably an area like this where you've got some support, resistance around here. So you've there should be some potential supply coming in, but again, it's only if you think that the Canadian dollar is going to strengthen or the dollar is going to weaken. But again, just looking at this from a demand perspective, this is where you're looking for a pullback. We know this to be an area of potentially strong demand. Why? Because, you know, buyers bought the dollar right from here, right? They thought it was undervalued here, right? So again, in the future, we could have potential value again. New Zealand dollar, US dollar, and New Zealand was on a bit of a tear this week. In the lead up, they had some good economic data come out. I think inflation and GDP. So what you had this week was prices pretty much just went through these supply zones, and now we have, you know, prices reacting from here, right? So we've also created a demand zone right there. A lot of people would have been potentially stop hunted here. That's a different subject. So if you're looking to get short now, basically buy the dollar. If the dollar's going to strengthen, right? This was the area to look for a short area. If prices do come back up into here, producing some sort of double top, then this is the area where you do want to get short. If you're looking to get long on the on this currency pair, meaning that you're going to be buying the New Zealand dollar, right? You think it's undervalued somewhere, this is going to be the first area to look for a long trade at this demand zone right here. Moving on to the pound dollar, and the pound dollar, move that over. I did get in short last week right here, and if you watch last week's video, you'll basically see my explanation as to why I did get short here. Prices did you know, stop me out, but I actually ended up getting in actually up here, and I'm made up for the losses. So and this is one of the things that new traders don't understand, is that just because you know, a level doesn't work out, right, you can actually short further, higher, and people would say, oh, you're trying to catch a falling knife, the trend is to the upside. But if you understand really value and why you're buying the dollar and why you're really trying to sell the British pound, then you'll understand that catching a falling knife isn't as difficult as you think it is from a technical perspective. So got in short here, and prices have currently going my way, so I would delete this, right? But what we have created is a higher low here, so potentially probably might be taking some profit here, and if you are looking to be a buyer of the pound, then this is going to be the area. But you have to take into account potential Brexit negotiations. If there are some developments with regards to Brexit, then you could see obviously a some pound bullishness. But are you basing your trade around that? Me personally, I wouldn't. I'm not a financial advisor, by the way. Do your own research, but really the smart play is really to buy the US dollar, right? As everything is potentially decent over there. See, potentially decent is better than a lot of other countries, and really is the economic engine at the moment, right? When it comes to GDP, interest rate hiking cycles, etc. Right? Trade wars has benefited the dollar as well. But if you are looking to be a shorter of the British pound, you really have to kind of wait for prices to come back up into this area. In fact, what I'm going to do is I'm going to add another supply zone right here. We haven't necessarily created lower highs or lower low, but we have had some supply here. We've had this kind of hard in, hard out movement, so there is definitely supply here. So I'm going to say that if prices do come back up into this area here, this is where you want to look to potentially get short, and again around this 1.31 round number, and taking advantage of the trend traders would say this is the trend, making lower highs, lower lows. So if you still do want to get short, this would be the area to look to get short if prices do come back up here. Moving on to the pound yen. We came up into this area of supply. All right, again the pound was strengthening really just on sentiment, sentiment view. Nothing fundamentally behind it, right? Which obviously allows us to buy the pound or sell the pound at a better level. So with regards to the yen being a risk-off currency, we've come up into this supply zone, and the yen now is benefiting from potential risk-off sentiment, especially the stock market selling off on Friday. So we've got this move down. If you are looking to be a buyer of the pound, really you're waiting for prices to come all the way back down here as proof of an area of value, right? Some people will look for support and resistance levels, right? But this isn't an area of value. This isn't a proven area of recent value, right? We need higher highs, higher lows, and again I explained it in the introduction into supply and demand. So we've got this big move up, and again you would be waiting for either prices to make higher highs for that area to then prove that this is an area of demand. We just don't want to take levels of support and resistance, and even if they do work, so be it. But I want the market to prove to me that there is demand at a certain price, right, before I then take this level as a trade. So there are your options, pretty much just shorting now. If prices do come back up, look to get short again, but again just bear in mind that this level has touched several times. So if risk is on, then the yen is not going to do so well in a risk on environment. But considering that the pound is going through Brexit negotiations, it's a decent potential short. Euro dollar and euro dollar, we're at the bottom of this this range right here. So if you do feel that the euro is going to strengthen, or the dollar is going to potentially get weaker, again, this could be just some profit taking going on right here, then be my guest and buy. Me personally, I'm going to be waiting for either a pullback to this supply level, which is what happened last week, and traders took advantage of that, or what we could see is something like this, where you have lower highs being made, and then what you would do is wait for a pullback into that. This is a demand zone here, but it would turn into a supply zone, and then you wait for a pullback into that supply zone before looking to get short. Right, so if we just look to this level, yeah, so really just waiting for a pullback. I'd probably prefer a higher pullback, to be fair, but if we don't get it, then it is what it is. That'd be the first opportunity. Again, second opportunity is anywhere where you've got a fresher area of supply, and you can see where prices kind of came up to this 1.15 round number before reacting. Round numbers do have significance on occasion, quite often more than you think, to be fair, and if that doesn't work out, then the 116 level would be the level to potentially get short. Euro yen, we come up into this supply level right here, and we do have an extra demand zone here. Let me just put that on there. Demand, right? So if you're looking, took advantage of this short right here, then you probably want to write it down to maybe one of these demand zones, depending on obviously your risk reward. If you're looking to be a buyer of the euro, then any of these areas here would be the area where you're looking for. Again, just be careful. Europe going through, even though it's kind of out of the headlines for now, it's really about the Italy budget crisis hasn't been resolved, just because it's not in the mainstream media yet. So we could obviously see with that resurfacing, there could be some selling opportunities for the yen, and the yen benefits again from a risk off environment. So don't be surprised if you do see the yen strengthening when you start to see the Italy crisis come back into focus, right? So yeah, those are your options. And again, for every trade, don't forget to determine the supply and demand order equation at levels and within areas of supply and demand. Don't forget to check out that video. Euro pound, it's kind of broken through these demand zones, and we come down to this this demand zone here, where we are seeing some demand take place. So again, if you want to be a buyer of the euro, if you think this is a bargain for the euro, right, this area here, this price level here, then be my guest. There is some demand here, but again, this could be what profit taking, we have no idea, right? Prices could continue heading down. From a fundamental and sentiment perspective, I'm staying clear of this this currency pair, but for those who do like to trade the technicals and looking for opportunities, then this is pretty much one of them. So if you want to be a buyer, if you want to be a seller, then here is your first area to look to get short. Right, so you're waiting for prices to really come up into here and then down, and then this will be your second area to look to get short. Aussie dollar, and I'm in this one as well. Got in on the Thursday, so prices did come up to this area of supply, and you can see we're reacting to the short side. We have put in a demand zone right here, which I do expect prices to react from. So again, you've got the 0.72 round number. So traders who, like myself, who got in around this area here, where are we looking to take profit? Potentially anywhere around here, depending again on our risk reward. And if we're selling, right, if we got short, to exit we have to do what? Buy. So there should be some demand around here. But again, fundamentals and sentiment, you know, is really what drives prices. So we could see prices just shoot through. We have no idea. But from a technical perspective, this is the area where you want to probably potentially be a buyer if you're looking to be a buyer of the Australian dollar and take advantage of the supply and demand order equation at this 72 round number here. And again, just look for the US dollar index to be potentially selling off or reach a, you know, supply zone while this is at a demand zone, and then you would look for positive price action on the US dollar index before taking the negative price action or bearish price action on the US dollar index before taking a buy trade on this pair. Moving on to the Australian dollar, Japanese yen, and again we've had this, you know, 1, 2, 3, 4, 5, 6, 7 days, 6 days of bullishness, come up into this supply zone here, and again we don't know whether this is profit taking or not, but if we are in a risk off environment, then the yen should benefit. Right, this would be a sell right now. If we continue to be in a risk on environment, I probably expect some sort of pullback, but I expect prices to potentially go higher. If you are looking to buy the Australian dollar at the moment, this is going to be the first area, unfortunately, until, you know, higher highs and higher lows are made, right? So those are your options for buying the Australian dollar, Japanese yen. And again, it does come down to your fundamental and sentiment analysis. Yeah, that is it for this week. Please like, please subscribe and share if you found this useful. Don't forget to comment if you want to ask me any questions. Just comment again in the section box below, or email me at info@trading180.com. I hope you have a great trading week, and yeah, take care, and speak to you soon. So if you'd like to receive the best supply and demand Forex levels absolutely free, click on the link in the description box below, enter your email address, and we'll send you the levels that we have just analyzed in this video. You'll get all of the major Forex currency pairs, and you'll get regular updates and never miss a Forex trading opportunity.